Hey traders, Jason here from Leavitt Brothers. Happy Wednesday. The market continues to do very well. A negative divergence formed between the S&P 500 and the 10-day AD line, which I highlighted last week. A negative divergence also formed before the S&P and the MACD histogram. These led to a brief and shallow drop, but now the indexes have recovered. We've had a lot of good trades the last 7-8 weeks. In fact, it's been one of the best periods of the last year. I mean, it's definitely the best since last summer. Over the last couple months, I've started doing a series of posts on technical indicators. I've posted them on our blog. I did one on the stochastic. I did one on MACD, RSI, Bollinger Bands, CCI, and just a couple days ago, I posted one on moving averages. I am going to start doing more videos on actual trades and how I use a couple of indicators to help identify good setups. This video will be my first, so hopefully it goes well. If you like it, if you like the topic, if you want me to do more of these types of videos where I discuss actual trades, give it a like. And of course, if you have any questions or comments, leave them below. All right, so let's get to it. All right, so here is AQUA. Okay, weak stock, got cut in half, was basing, okay, had a resistance level like here, support level here. As you can see, it got scooped. It traded above its 50-day moving average, which is the blue line here. Found some support there. It popped on the biggest volume in about, like 3 weeks, moved sideways. And then it continued up. Okay, so when it was basing, it's not very interesting. Even when it gets above its 50, it's not that interesting. We had it on our list, but not easy to play because a chart like this thing could just move sideways for months and months and months. You have no idea. But when it pops on big volume, and then I could back up and say, hey, we have a resistance level here at 10.5, and then the stock gets supported here by its 21-day moving average, EMA. That gives us a frame of reference. We have a nice base, we have obvious resistance, we have a moving average that's supporting it, so we know where our stop is. Breaks out at 10.5, which was the high from back here, and then it runs up to 12.5. So it's a really good textbook play that just a couple of moving averages could identify. Next chart, QTT. This stock, all right, first of all, let's ignore these first two candles here. The stock went public, it went up a bunch, down a bunch, but ignore those two candles when it went public. Notice what we have here. We have a nice base, okay? This is a smiley face, okay? I can draw like bing, 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 okay? You want to buy smiley faces, okay? This is a nice smiley face bottom, and that's what you want to look for, okay? We had it on our list over here. Okay, it kind of got scooped up by the 21, which is the orange line. It got rejected by its 50. That gives us a frame of reference, how to judge it. Okay, it breaks out. We have volume here. And then if you don't jump in this move, that's fine. Okay, have patience. Keep it on your list. Keep watching it because oftentimes you get another chance. And we did because you can see the stock came down here and it bounced off its 21-day EMA. Now, while it was bouncing off its 21-day EMA, if I back up, here's the weekly chart. It was bouncing off its 8 EMA here. And if I zoom in the other direction, this is a 195-minute chart. The reason I use 195 minutes is like every 2 candles is a day. So each candle is essentially half a day. The reason I do it is because I wanted something that was less than a day, but like more than an hour. The problem with an hourly chart is there's 6.5 hours in a day, but so an hourly chart doesn't fit exactly into 6.5 hours. So I use 195 minutes. It's a half a day. So you can see here, this was being supported by its 50 on this particular time frame. Okay, so you have a stock. Again, let me back up. Whoops. So you have a stock that went up and came down, and at the same time, the 21-day was supporting it. The 8 EMA on the weekly was supporting it, and the 50 on this time frame on the 195 was supporting it. Okay, so obviously this is an area that I want to get long. After that, it's just a matter of like zooming in and trying to find an entry. As you can see here with this chart, we have a nice candle here which breaks the stock out of this range. volume decent. Okay, at that time you get the MACD crosses up, you get the stochastic is moving up. It's a really, setups don't get that much better than this because you have a strong stock that comes back to an area of interest, and then you get a continuation of the move. So this was a really good play. If I zoom in one more time with the hourly chart, you'll notice that the hourly 50 is the blue line here. It's support here, resistance here. Okay, so when I see the stock consolidating here, I say that's fine. Okay, stock ran up, it pulled back, it was finding support over here on all those different time frames, and when I see that the 50 is capping it, that becomes my line in the sand. If it could take out that level and close above it, then I want to get long, and as you can see, getting long here, the stock then paused, but then it rode its hourly 21 up. Okay, the exit would have been right here. You have no idea if this thing's going to come down and then go back up, or if it's just going to come all the way back down to here. So you got to cut it loose here. Then once you're in cash, then you could reevaluate it, and you can find another trade. If not, hey, you got in the mid 8s, you got out in the mid to high 11s. That's a really good trade. Okay, let's move on to the next one. Here's ACB, one of the pot stocks. What we have here is we see that the 21 capped it. I mean, the 21 supported it here. The 21 was kind of a line in the sand here. Resistance there, resistance here. So as the stock was moving up, nestling up to the 21 here, that was my entry. Okay. Also, we got an MACD signal here. What I see here is we get an MACD cross here, and then something I talked about in the MACD tutorial is you get a cross, then you get a push higher, the MACD comes down, kisses the line, and then continues up, and that's what we got here. Okay, this is one of my favorite types of setups, is like when you get a cross and a push up, then it comes down and kisses. In this case, it went a little bit below, but it's close enough that I don't worry about it. We get a kiss and then a continuation of the trend. And this played out. We get a cross up here, then on the double bottom, it comes down and kisses, and then it continues up. We got a resistance level here, both in terms of price and in terms of the 21 moving average. It goes up. And it goes up from there, and our stop could be below 5. If you missed it, that's fine. Keep watching it, because look, the 21, which was a huge level here, a huge level here, here. Okay, look, the 21 supported here. So even if you missed the first move, you could watch it for a second move, watch it for a second chance. And if you got it here, then you still made 1 to 2 points, which for a $6 stock is really good. Okay, if I zoom in. Here is the 60-minute chart. Okay, so this area over here on the left is where this was the double bottom. This was the second bottom. It moved up, and like resistance level was here. Okay, so that was the first entry. So if you miss that and you're looking to buy, so first of all, I should point out that if you missed the first move, you had a negative divergence here that kind of told you that there was going to be a top there. Then as the stock pulled back, now it's on your radar. You're looking for an entry. You're looking for it to pull back to some significant level, a moving average on some time frame. We got a positive divergence here. We got a cross up, and then it gets above the 20. Whoops, wrong pen thing. All right, so then it pauses right here at the 21 on the hourly, and then it rides that moving average up. Okay. There was a divergence there in here, and that led to a pullback back to the moving average, which is fine. Okay, but you can see, and then it rode it up. Okay, so if you miss the first move, you keep it on your radar, and we got a positive divergence. We get a cross of a significant moving average. We get an MACD cross, and then it rides the moving average up. And while I rode it up, you got a divergence here that just told you that we're going to get a pullback. But if you want to nail big moves, you can't panic just because it pulls back a little bit. As long as it stays above the moving average, you can stay in the position, or even look to add to it. All right, let's move on. Here's NEO. Okay, we get another MACD trade with this one. Get my pens here. All right, so we have a double bottom. Boom, boom. You get a cross here. Okay, what did I say earlier? On the earlier chart, we get across the MACD. We get a MACD moves up, comes back down and kisses, and then continues up. I love these, cross, come down and kiss, and then continue up. This plays out. We get this, this, and this is exactly what I'm looking for. The first move up is strong enough to make the MACD cross. The move down after that is weak enough that the MACD does not cross back down. It just kind of comes back down and kisses. And then when it continues, we get that. And then if you look closely, you can see we have like a little bit of a trend line resistance there, so that you can buy that. But in general, when I see the cross, it goes up, comes back down and kisses. I know that this is a stock that I want to get long somewhere in here, and I want to play it. And I mean, you can see what happened there. If I zoom in, and again, this is the 195 minute chart. It's every 2 candles is a day. That area where I was just talking about, where it came back down, and I circled that area where I was looking to do business. It happens to be the 50-day moving average, or 50 moving average on this chart. So again, it's another. I look at multiple time frames, and if I see an entry, if I see an area of interest, then I'm looking at multiple time frames to see if do I get assistance from somewhere. Is there a moving average? Is there something on some time frame chart that will give me a frame of reference that I can get in with a reasonable stop? And as you can see, I got support here from this moving average, and then I got price resistance here, so you could play a breakout. All right, next chart, CC was a strong stock, got cut in half. You could see that it was riding its 21 EMA down, here, there. Lots of times it got rejected. So we got a double bottom here. Okay, this is, again, my favorite MACD setup. We get a cross, a push higher, a kiss, and then a continuation up. Okay, again, my favorite setup. The first move up causes the MACD to cross. The next move down is shallow enough and weak enough that the MACD just kind of drifts down, and then you get the kiss and it takes off. And with the 21 moving average being significant in the past, there's your entry. You could play a breakout at 21, 28. You could play a breakout over the moving average. In either case, double bottom with this kiss, with this cross and then kiss. That's probably my, one of my favorite plays, when playing a stock that's dipping. Here's CC. Here's the hourly chart. This right here is the second dip of the double bottom. Here was the first one. Okay, so we have a positive divergence here. It gets above the shorter moving average. I think I said on the last chart you could have played a breakout at 28. This is the hourly chart, so you could see, hey, if you zoom in with the hourly, you got a positive divergence, and then it gets above this moving average here, the 21 on the hourly chart. So you don't have to wait until 28 is taken out as a breakout. You could zoom in on an hourly chart, see the divergence, see the MACD cross right here, see the little bit of a dip there, and then a continuation. So you could be in here so that when you get up to here, it's either going to break out and go, which is what it did after a couple of days, or if it breaks out and fails because you got in over here, you have a little bit of a cushion to work with. You can still make money on the trade or scratch it. Okay, if you're always playing breakouts, let me just clean up the chart here. Okay, if you're always playing breakouts and you get false moves where it goes like this and like this, you're going to lose 50 cents, lose $1, lose 50 cents, lose $1. But if you zoom in with an hourly chart, you can get in a little bit early. When they don't work, you could you can still salvage it and make a little bit of money, and little gains add up. Okay, better to have little gains than little losses. All right, so a legit question after that is, like, if I look at all these moving averages and some indicators on multiple time frames, is it hard? Is it confusing? And it's actually not. Okay, most softwares will let you have a grid, and I have a grid like this spread out over an entire monitor, sometimes over a bigger monitor. And it just gives me a quick glance of everything. Like, this is the monthly, weekly, daily. This is the 195 chart, okay? This is either the hourly chart or the 65-minute chart. Again, hourly chart doesn't fit into a day, so 65-minute chart does. And then this is 15-minute and then 2 5-minute charts. Okay, so when I see a stock like this, okay, I see the 8 on the weekly supporting it. I see the 21 on the daily supporting it. I see the 50 on the 195 supporting it, and then I come over here, and of course on my screen, I know you can't see this very well, but on my screen this is blown up. I see the daily here that supported and then acted as resistance, so that gives me that gives me my entry. So it's not that hard to just put a grid up like this and to plop a signal in there, and your eyes can go from chart to chart to chart, and I'm looking for something of significance. I'm looking for a moving average that is very telling. I'm looking for a divergence, either positive or negative, with the MACD. I'm looking for an area of interest that, maybe a different moving average on 3 different time frames, like as you see here, all support the stock, so I know that that's a strong level. It's not that hard just to plop a signal into a grid like this, and within a minute or so, with your eyes kind of glancing over it, you can tell, is it a stock I like? Is it not? And if I like it, how can I zoom in, and trade it? All right. Again, thanks for listening. Again, if you want me to do more of these types of videos where I discuss actual trades, give the video a like, share it with your trading friends. You can also subscribe to the channel right here on YouTube and be alerted of new content when it's posted. Come check us out at Leavitt Brothers. If you're not getting the results you want, change something. Change the types of trades you do. Change how you do your research and where you get your ideas from. Try different things until you find something that works, okay? Check us out at Leavitt Brothers. Perhaps we can be the key ingredient that gets you over the top. Again, thanks for listening, and I'll see you next time.